Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, amazing people all around the world of crypto and blockchain globally. And today I have another amazing guest. He is the CEO at Axis. His name is Chris Kim. Chris, welcome to the show.
Great. Thanks for having me. Pleasure to meet you.
Very happy to have you here, and I look forward to this conversation. And I'm going to ask you first. The first question I ask everybody is what
Mm,
is your background, and is it a logical background for what you're doing now?
cool. Yeah, my background is pretty much in the core of institutional crypto trading. I spent many years in the crypto space, starting at QCP Capital as a first employee. It's a major crypto trading firm based in Singapore. I was running a lot of arbitrage strategies and market making stablecoins back then. More relevantly, I later co-founded a quant hedge fund, where we successfully scaled our AUM to over 400 million. That fund was entirely built on quant strategies, market neutral strategies. So yeah, I think it's a very logical background. My whole journey has been around mastering those highly disciplined, risk managed way that institutions trade. And with Axis, we're taking those exact professional strategies and rebuilding them, so-called, as a transparent, open protocol.
Awesome. So Axis, what's Axis like? So what's Axis all about, and including your vision and your mission and your long-term objectives?
Yeah, in short, Axis is the capital markets layer for the digital economy. We've built an infrastructure that proves institutional quant strategies can run live 24/7 on chain with full verifiable transparency. So we built our flagship product on top of our infrastructure. It's called USDX. It's a dollar synthetic asset. The critical difference is that the underlying dollar aren't sitting idle. They are actively managed by the protocol to generate yields while making markets efficient.
Awesome.
Yeah, and yeah, I would say like our core mission slash vision is to democratize access to this highly, stable, scalable, professional grade market neutral yield. Um, you know, my view is that Axis will become a fundamental, trustworthy building block for all the DeFi space and the tokenization world. Yeah.
Great. So let's talk about the quant and the neutral strategies and the automatic trading. We had a very bad October and November in crypto, right? So I said,
Exactly.
okay, great, November's over. It's December 1st, and in December 1st, I wake up and the market, which I thought would be relieved, tanked. It seemed like a coordinated effort, an automatic, coordinated effort. What was that? What was that all about? And how, like, why? But what was that like? How was you able to coordinate that whole thing?
Well, I'm firstly, I'm not a directional trader. I mean, crypto has become a different type of an asset if you compare to, let's say, 4 or 5 years ago. The major participants have changed, the behaviors have changed, and as you know, it's a very reflexive asset that kind of reacts to macro conditions and changes. So in November, it was mostly because of Powell with the more hawkish tone that kind of led to this bleeding. And then in the first of December, we had the BOJ thing, which kind of made everyone kind of risk off. But things are looking better now with all the positive news coming out lately, as in the past 24 hours. Yeah. Um, Coming back to the strategy itself, yes, we are market neutral. That means we don't take directional risk. We when we say arbitrage, it means that we are buying and selling the same type of instruments at the same time at different venues. So the thing about crypto markets is very similar to FX as opposed to equities market, where there are hundreds of exchanges. In stocks, you have one venue, and then with hundreds of brokerages. But in crypto, it's the opposite way around. So it's the structural inefficiencies that we are sort of taking advantage of, or at the same time generating yields, we are synchronizing prices across the globe.
Got it. And the BOJ thing. I heard something. There was something to do with BO. What exactly was the BOJ thing?
Right. It's which relates to bonds. Japan has a different type of environment where they don't uh, sort of they don't operate in the same way as different types of economy, and through the changes in the rates, sudden unexpected situations. I think a lot of different currencies were impacted, related to Japanese yen, and so that kind of impacted crypto as well.
Got it. So there's a rate change. Now, I thought earlier, I had conversations with people like half a year ago. They said Japanese rates would be very, very bullish for crypto because it would add liquidity to the markets, and people would be forced to come into crypto instead of using the yen. I don't know if that's true.
Possible. Well, there's always two sides to these types of stories here.
Got it. So a market neutral strategy, like how can that scale across public blockchains? And why is it now is a market neutral strategy more important than it has been in the past 5 years?
Yeah. So for us, the key to scaling is the nature of the strategy itself. Our delta neutral strategy focuses on capturing price differences across the global markets, not just crypto, but FX, equities. We have these tokenizations happening, and I'm also foreseeing that there will be more tokenized assets on chain, and it's a different instrument, so-called, and the prices are all over the place. You need a participant that is able to put up their balance sheet to be able to capture these price discrepancies, and we want to be the core function for that.
So right now in crypto, what do we have? We have oracles. We have Oracle networks like Chainlink, right? Which I would consider DeFi, right? How does that need to change and adopt and transform to capture all these inefficiencies and then maybe capture the arbitrage? Like how do decentralized Oracle networks fit into the equation going forward?
So I would say we are looking at more than just oracles, which is providing data to different platforms and users. We are pretty much interested in cryptographic solutions to be able to verify our underlying assets, how we execute the trades, how the yields are being generated, and where the underlying is sitting at any given point in time. So we are taking these new type of solutions and trying to come up with a new standard to be able to provide a fully verifiable on-chain strategy.
Got it. Okay, that makes sense. And how do AI agents fit into that?
AI agents, so typically AI or machine learning in the traditional finance space, models are usually utilized to capture or chase alpha through predictions. But for us, it's a different, we take a different approach. We leverage these technology to chase for structural inefficiencies and frictions. So in other words, we use quant models to execute delta neutral strategies, but also optimize risk management. So yeah, lots of applications of AI models in different departments in our protocol.
Got it. So what you're saying is that there are a lot more structural inefficiencies now in crypto than there haven't ever been before because of all the institutions, right? So
that is one part, but also the nature of how the structure of crypto markets are developing. We have different dexes popping out every day. with more exchanges, regional exchanges that is trading against local currencies. All these are venues that requires arbitrageurs and market makers to step in and synchronize these prices. And we want to be the general layer to be able to support that.
Got it. So I think back to October 10 and the 18 billion was a $1 billion crypto wipeout. I think 1/3 of that wipeout were the money were the market makers. So right now, what I see it is there's a need for market makers, right? Or there's a need for efficiency or consolidation in the market maker space. So right now there are, you said arbitrage. What are those specific arbitrage opportunities that people should be looking at, and where do we need the market makers to be to start or come in to play?
Right. So maybe I'll just go back to 2017 when I first joined crypto. It was when there was no institutions. They were treating crypto as like a joke. The arbitrage opportunities were much crazier back then. You buy Bitcoin on one exchange, you can sell on another exchange simultaneously and could potentially net 40% of difference. But today, the difference is very minimal. There are many institutions that came in that is doing this exact, similar strategies. But I would say that we have our own edge. We specialize in low latency executions. It's very difficult to execute these manually, and for us, it has all been executed by our infrastructure and trading systems that we've been developing over the past few cycles.
Got it. So you have a proprietary low latency system that works better than the rest of the market. That sounds good. Like, what's your secret?
Well, we believe that we were focusing on, since the very early days. If you were to start something like this from scratch, it is going to be extremely difficult, costly. Takes a lot of resources. But because we were there since the early days, we were able to develop and adapt as market changed, and that is our biggest sort of moat that we think. We specialize in low latency across different global regions. So, Asia, Europe, Latin, US, etc. That's what it is.
Okay, so your definition of low latency is what? So I understand better.
So the time it takes for your order to reach the exchange and come back. Yeah.
Okay, got it. Yeah, that makes sense. Okay, so the new model you're creating, and your transparency, you are replacing unsustainable DeFi models of the past, right? What are some of those unsustainable DeFi models? Because I kind of hope I'm not invested in some of them.
Yeah, I guess if you look at the DeFi space, it was mostly propped up by speculative token incentives or unsustainable yield mechanisms. And it's usually from token emissions or even credit markets. And basically, if you look at today, it's mostly rehypothecation of these yields that kind of gets bloated up to tens and 20% APYs. But we derive our yields from actual trading strategies that's capturing the inefficiencies.
Got it. So when I look at when I hear the word unsustainable yield, I don't know why this happens. What pops into my mind is MicroStrategy. And I have a picture in my head of Bernie Madoff, and I'm like, I don't know why. Like, people, what's the state of like a MicroStrategy, with maybe unsustainable yield in a bear market versus what these institutions are trying to do now, which is with the whole indexing thing and what's the area that we need to be concerned of about with MicroStrategy, and are there better models for DATs?
Yeah, I guess every DATs has their own, different rules on how they are managing from governance to how they are deploying their capital. I would say MicroStrategy, they've done, the best job in this financial engineering. It is beneficial for MicroStrategy strategy for others to follow their model because they have already picked up their bags, and if anyone else is following the model, they're pushing up the prices of the Bitcoin, so to speak. And yeah, I would say I'm very careful with this takes, but yeah, I would say that not all debts are the same. You have to look at how potentially even though the premiums are there, you might get diluted from issuing new shares. There will be different types of way of operating, right? So yeah, every investors have to look into individual debts separately.
Guys, so you think their model is a good one compared to some of the others?
It's the more resilient model, yeah.
Got it. Sounds good. I'm glad to hear that. So, yeah. So when I think you say replacing unsustainable models, I'm thinking I'm an investor in Chainlink and Aave, and I hope they're going to last a while. What are the risks of these old school, DeFi protocols being replaced, by quant models and quant strategies? Are they at risk?
Mhm. So for this, it's not really like an algo trading question. It's more of like using quant models to see how these different coins are being valued. If you look at these OG dinosaur coins, like you mentioned, Chainlink, their emissions, the circulating supply is mostly out already, as in the float compared to the maximum supply. For a lot of these coins, they are trading at a similar kind of a PE ratio, so to speak. And so the market is pricing them, I would say, fairly. If not, because of the way how the market structure is is not able to handle such a big buy pressure for new coins. Oftentimes you see a lot of inflated valuations for newly launched coins.
Yeah, and then and that's why the people say pump and dump, right? They go quickly up, and then they crash and never come back, right? So how do you create more sustainability in the new coins when they're released, and so they don't do that?
Well, I guess it comes down to your previous question early on, but there needs to be more standardization, transparency on all how these tokens are being issued, how these are being distributed to different venues through where they're working with market makers. But there's just a lot of distrust, and it's very opaque. I think we're pretty much at the stage where the market participants have learned all those, and they are picking assets very selectively based on these informations.
Got it. So one of the things that people like to do, tell me they want to be in crypto for, is not because the price go up, but they want yield, they want passive income, they want consistent passive income, which I haven't seen yet. So what is the future of sustainable passive income as a result of having measurable market neutral yield that's open, the Web3 open source?
Right. So when it comes down to passive income, I think we need to have like a whole new category for crypto passive income. I think the traditional language does not fully convey the risk that DeFi yields possess. So for us, it's market neutral yields. These are verifiable through third-party solutions that are auditing our balances across different global markets. The returns come from actual trading activities rather than uncertain token incentives. This allows investors to earn measurable risk-adjusted returns across major asset classes like USD, Bitcoin, and gold.
Got it. Got it. So one of the things, I talk to people who live near me. I'm like, and a lot of them are invested in the stock market. I'm like, I don't put my money in the stock market. I put it in the crypto. I put it in crypto, right? That's me. But a lot of them say, I asked them, why are you not investing in crypto? It's the future. And they said, it doesn't pay a dividend. I'm like, what? So how do you see apparently dividends are important to people. They're not important to me, but why are they important, and how can we start offering like a crypto dividend on some of these L1s and crypto protocols? How's that even possible?
Yeah, I guess it all comes down to whether the protocol or a blockchain is able to generate a meaningful revenue, profits, to then be able to pass that down to the users. I think in the previous cycles, a lot of project founders were very afraid of creating these mechanisms to be able to distribute profits. But I think we are now finding a good model or sort of method to be able to pass that down to users through different kinds of mechanisms like staking.
Got it. You hear a lot of people afraid of love. So you hear about liquid staking, you hear about other kinds of staking, and it's an area that's not really known that way. Like I can go on Coinbase and I could say, okay, let me stake some Avalanche and get 4% a year. I know how to do that. But a lot of these sophisticated ways of staking, people don't fully understand yet. So what's the best approach how they can start to view staking and how they can view that as an opportunity for the passive income?
Yeah, so I guess the access points are quite wide for users. What I mean is that depending on your knowledge level, you can choose to go to a regulated venue that is doing all these staking for you. Or if you are more sophisticated, you understand all the risk, then you can directly interact with these protocols. So there are many options in which how the users today are able to interact with DeFi directly or indirectly.
Got it. So you said you came in 2017, right?
Yes, that's correct. Yeah.
Okay, so did I.
Nice.
So whenever somebody comes in at the same time as me, I like to see, how they were able to be resilient despite all the changes and the fluctuations and transformations of this market. How they were able to stand in there, and so I want to find out from you how you were able to, overcome the time issue that most people have encountered.
Yeah, I think it was partly, I would say, lucky for me, but it could be unlucky. But I wasn't a directional kind of person, even though even from day one when I entered crypto, I was an arbitrager. I bought Bitcoin on one side, selling on one side to net the profits. Maybe because before crypto, I was more involved in the fintech space, especially in remittance. I was experimenting using Bitcoin as an underlying channel for remittance. And so my mindset is maybe, kind of fixed in that way where, I'm using crypto assets as a way to, for remittance or trading arbitrage strategies.
Got it. Awesome. Yeah, I always like to find out, and then also, um, I checked out your LinkedIn profile and it says that your company, you're building in stealth mode. Okay.
Oh yeah.
Why are you in stealth mode, and what's been the benefit of building that way?
I am actually about to edit that today. We just made an announcement a couple of minutes ago on our seed raise round. And so, yeah, no longer stealth mode, but yeah, for quite some time we've been on stealth mode.
What's that announcement?
We've successfully raised 5 million from Galaxy Ventures, OKX, FalconX, and a couple of other TradFi adjacent companies, as well as exchange VC arms.
Awesome. And as a result of that, what's going to be possible for you?
Yeah, so it was sort of 0 to 1 moment for us. We are coming out of stealth mode. We are now working with different PR strategies and social. So yeah, we'll be building our product to be able to go live in early January. That's when our public, DeFi vaults will go live, where users are able to participate.
Awesome, awesome. That's going to be very cool. So when you're opening it up, you open it up to just the Singapore area or everybody.
It'll be
Everybody.
Yeah, it'll be open to all. Yeah.
Awesome, awesome, and that sounds wonderful to me. So I want to thank you very much for your time today. I have one more. I have really one more question. Like, how can people find out more information about you, about Axis? How can they keep up to date on the latest of what you got your product, and how can they get involved? How can they get start using you guys?
Yeah, please follow us on our Twitter. It's AxisFDN, or our website, axis.to.
Awesome, awesome. Thank you very much for your time today.
Oh, likewise. Thanks so much for your time.